After knocking on the $35 door for the third time in about 14 months, silver has finally broken over $35 into the $36 an ounce range for the first time in 13 years. In this silver-centric market commentary for Saturday, June 7th, 2025, we'll take a granular look at the breakout. We'll put it into historical perspective relative to the last big silver move, and we'll also look at some corroborating evidence that suggests this could be the real deal, finally, that might take silver into the mid to low 40s. Hi, I'm Dana Samuelson, president of American Gold Exchange in Austin, Texas. If we can help you with any of your needs in the physical precious metals arena, whether you're buying or selling, we'd love to have that opportunity. First, let's take a brief look at gold. After making a big run higher, 44% higher in the last 12 rolling months as of Friday's close at about $3,315 an ounce, gold is holding in a pretty steady range after making those big gains in April and May. We look at a 6-month candlestick chart, gold is consolidating its gains, holding above 31.75. I had previous upside resistance at 33.50, and I've raised that $50 to $3,400 an ounce now because the market is just pretty strong, and the candlestick activity over the last couple of weeks is higher with a flat ceiling, and that usually means the market's going higher still. Time will tell. But let's get on to the main event, silver, and this sharp breakout over 34.72. This is a 1-year silver chart. Shows we've got a 22% 12-month rolling gain right now, and it shows how silver hit 34.72 in October, and then 34.38 just before the Liberation Day turmoil, and now it's broken out over $35 an ounce to as high as $36.50 before closing the New York session Friday, June 6th at $36 an ounce. So silver has broken out in earnest. Let's take a look at this in historical perspective. This is a silver chart going back to 2000, which shows the previous big run higher for silver, when it went from about $9 an ounce on the GFC sell-off all the way to $48.60 an ounce during the last big run when gold went from about $800 to $1,900. Silver lagged gold, which led then, just like now. And then when it played catch-up with a vengeance. And this breakout for silver over $35 an ounce may be the start of that bigger move for silver. It certainly looks like it, but we're not quite out of the woods yet. If you look at this same chart, but tightening up a bit, going back to 2009, you can see when silver was correcting down from that $48.60 high going into 2013, we had two previous highs at $34.93 and then $36.89. So basically about $35 and about $37 an ounce. Right now, silver is in between those two. So a breakout over $34.93 is good, but for silver to confirm that this is the big move, it's really got to get over that other previous high of $36.89 or $37 an ounce to confirm it. And we're not quite there yet, but this move is looking pretty good. This is an 18-month silver chart that shows you how silver has moved higher, gone sideways, moved higher, gone sideways, and moved higher and gone sideways again before breaking to the next level each time. First at $29 an ounce, then at $32 an ounce, then at $34.72, the previous high from last October. We show the $34.93 previous high going all the way back to 2012. And now the breakout, punching as high as $36 an ounce. Putting this into perspective with gold, you can see that when silver was $29 an ounce, gold was $23.91. When silver was $32, gold was $24.26. When silver punched up to $34.72 last fall, gold was only $27.85. When silver got to 34.38 in April, just before tariff turmoil hit, gold was 31.62. And when silver broke out over 34.93 for the first time in 13 years, gold was actually higher at 33.75. And now silver's punched up to 36 and gold has come down to 33.15. We'll talk about what that means in a little bit, but that's another interesting and potentially corroborating point of evidence for us in this silver breakout. Here's a look at the long-term gold to silver ratio. Here's a long-term look at the gold to silver ratio. The last time the ratio got this high, over 100, was during COVID when it punched up to 122. When silver played catch up then and moved from about $18 to $29 an ounce, it brought the ratio all the way back down to about 65 to 1. Recently, the ratio has gotten over $100, 100 to 1, with the big gold move from 3,000 to 3,500 that I've detailed in depth in the last couple of updates, while silver continued to go sideways. Well, now, after hitting a current high of 104 to 1, the gold to silver ratio is now down to 92 to 1. So silver's starting to play catch up in earnest. Drilling down a little bit more closely, you can see how the ratio punched up to 90 to 1 going into the spring of this year, then ran all the way to 104 to 1 as gold continued to surge on the back of tariff turmoil, especially with China, while silver went sideways. But now, with gold correcting a bit and silver punching higher, that ratio has narrowed sharply, but it could still come down quite a bit into the low 80s, maybe even below that. And if that's the case, it'll bring silver into the $42 to $44 range, which is the previous high for silver above that $36.89 resistance point. So the gold to silver ratio at close to 80 to 1 fits perfectly with the target that we've got for silver going higher, which would be in the $42 to $44 range, which is the next resistance point higher for silver. I find this next section pretty interesting. Since I founded American Gold Exchange in 1998, 27 years ago, I've spent a lot of time on a daily basis watching the COMEX futures markets for gold and silver in particular. This is an image of the silver futures contract going back to mid-December 2024 through Friday's close yesterday. And what's interesting to me about this is as silver bottomed with gold at the turn of the year and then started to move higher, somewhere in February or March, I put a red support line under the rising silver price. And on this Thinkorswim platform that I use, which Schwab now owns, when you put one of these support or resistance lines on, you can extend it to the right as, add in out into infinity, which is what happens. So I clicked the support line to show, hey, silver holding support, and the line went way out into infinity. I really hadn't paid that much attention to it until just the other day when I pulled up a longer term chart. And what's interesting is how when silver tumbled following the Liberation Day sell-off, what was support became resistance, which is that red line from the lower left to the upper right. And now we've finally broken over that upside resistance, putting silver back on trend higher for the first time since all that Liberation Day turmoil. That's pretty interesting, isn't it? Support becomes resistance, becomes support again. Now let's drill down a little bit more closely on the breakout as we saw it happen in real time this week. This is a 1 week silver chart that shows you silver tested that $35 high on Monday and Tuesday session, but couldn't quite do it. Then Thursday, in early morning trading at about 4 o'clock Central Time in the morning, which would be London market trading, silver finally broke out over $35 an ounce for the first time in 13 years. The blue bars at the bottom of that upper rectangular box are volume. So that's the number of contracts trading hands, which shows you volume has spiked on this run. And down below that is the relative strength indicator. So when you see the price high, that means the market's strong. The relative strength indicator shows it high. And then when you see it down near the low of that rectangular box, that means the relative strength is weak. And it's pretty good to see that after hitting a peak, silver continued to trade a little bit higher into Friday's trading session yesterday, June 6th, which would normally be a profit-taking opportunity. But that hasn't happened. So that's some corroborating evidence that this silver move looks pretty solid. Normally, Friday, after a big move like this, would be profit-taking, but the market's not giving it up. In fact, it even moved a little bit higher and held up on the close, which is really good. Now let's drill down just a little bit further to show the breakout as it occurred on a tick-by-tick basis. These are 5-minute candlesticks. And you can see once silver broke over $35 an ounce, the volume picked up substantially, and so did the price momentum. This is a classic algorithmic pattern where you see the market come up and test resistance tentatively, then it makes a move higher, and then the volume starts to increase as the price moves higher, and then it hits a peak and sells off a bit as the market tests both higher and lower. It went sideways for an hour or two, volume fell down, and then the market started to move higher in earnest again, signaling this breakout was holding and is for real. So this looks like a classic algorithmic breakout with computers driving it. But then humans come in behind it and say, what are we going to do next? And that's when the human hand starts to take over. And the fact that silver has held on to these gains through a much higher New York price on Thursday and then moved higher still in New York on Friday is a very, very good sign. So those are the COMEX charts that I wanted to show you. This is a 6-month candlestick chart for silver that shows you those two blue resistance points to the upside going all the way back to 2012 and 2011. We've gone over the first resistance at 34.93, but we still have yet to break over the second resistance point at 36.89. And until silver can do that, this would be a tentative breakout. But so far, it's looking pretty good. And we've got some corroborating evidence to back that up. First of all, COMEX warehouse stocks for silver remain near tariff-driven all-time highs, which were at 504 million ounces. Today, we're at about 495 million ounces, well over the COVID high of just under 400 million ounces. Now, as I've showed you in our last update, the amount of gold in COMEX warehouses has ebbed lower at a much faster rate, but silver COMEX warehouse stocks are holding up very well, and there's a reason for that. One of the friends that I've made over the last 6 months is a man named Robert Gottlieb, who's a previous managing director at HSBC. So he's got some serious industrial strength precious metals chops. Now, my career goes back to 1980, and Robert's is pretty close to that. And we actually have found out we have some long-term mutual friends in the marketplace. So when I have some technical questions about what's happening, especially revolving around premiums and premium differential between New York and London, I ask Robert. Well, this is a post Robert put up on LinkedIn a couple of days ago where he says that we're seeing COMEX warehouse premiums at a discount to the over-the-counter market, which would be London, which means gold's a little bit more valuable outside of the COMEX warehouse than inside of the COMEX warehouse. So we're seeing stocks of gold in the COMEX warehouse drop to 38 million ounces from a high of 45 million ounces from about 5 or 6 weeks ago. But with regard to silver, on the other hand, COMEX is at a premium. So don't expect any movement out of the COMEX warehouses and I would add anytime soon. But if silver in New York, despite no tariffs being enacted, and with warehouses already at record levels, with silver trading at a premium in New York, this is another sign that corroborates this physical breakout for silver over $35 an ounce into the $36 an ounce range. I like it. Another corroborating sign is platinum breaking out as well. Over the last 2 or 3 years, I've said on many occasions, platinum is a trader's market. You buy it around 900 and you sell it around 1,075 because it can't really break out higher than 1,075 in earnest. Well, it's just done that in the past week. After testing 1,075, it's now gone over the second next higher resistance level at 1135. Today, it's about 1175. So you've got silver breaking out and platinum breaking out, which is a good sign. That means there could be some rotation within the precious metals sector out of gold, seeking better opportunity in other metals. Now, silver is clearly a beneficiary of that, and so is platinum. And these are good signs. It doesn't mean gold's going to give up a lot, because none of these metals, either gold or silver in particular, have given much up when they've gained over the last couple of months. So the market seems very, very strong. And this move for silver higher is being corroborated both by COMEX warehouse, physical movement of silver and premiums in New York, and now platinum breaking out as well. What is a little bit of a conundrum is palladium, which is moving higher, but has yet to break out in earnest. Now, I do like palladium better than platinum because it's scarcer and it theoretically has more industrial uses. But when it comes to jewelry, platinum is very popular in Asia, where palladium is not. So it's a little early for me to say what's really driving platinum substantially higher than palladium right now, but seeing them all moving up is a good corroborating sign that the silver breakout could really be the real deal this time. So I like everything under this silver breakout. It held up in Friday trading. There's a premium for silver in New York over the London market. And we've got corroborating evidence from other precious metals as well, platinum in particular. And when it comes to supply and demand, silver remains in a 5-year structural physical deficit, which simply means that the industry consumes more silver on an annual basis than comes out of the mines. So we have been eating into the above ground supplies of silver for the last 4 years, and we're going to continue to do so now in a 5th year. And that's a bullish fundamental indicator as well. So moving on to the physical market, we have a couple of specials I'd like to mention. We have 1 ounce gold eagles at $50 off their regular price. This is for backdates, not the 2025 issues, where our only source is the mint. The market has them at a little bit of a discount to the current year. So we're offering those at $50 off, which is one of the lowest prices in the country. In silver, we continue to have a dwindling stash of 2025 Canadian silver maple leafs as low as $2.99 over silver in quantity. Again, one of the best values in the country for physical sovereign minted silver coins. And in vintage US gold coins, we have a special on the $20 Saint-Gaudens in MS65 condition today at $50 off per coin. And what is compelling about these coins is that their premium today is only 17% over melt, or their intrinsic gold content. 17% for a coin that we know there are less than 300,000 known survivors. Now, on a good year, the U.S. Mint will make 1 million gold eagles, all perfect, and then next year they'll make 1 million more. For the total number of survivors for these vintage $20 Saint-Gaudens in mint state 65 condition, that total is about 282,000 known survivors today. And if you look at the price and premium chart, you can see how low the current premium is relative to the last 10 years, where it's been as high as 80%. And the average 10-year premium for these coins are 39%. So today's premium is less than half of the 10-year average premium. And that's simply because the gold price has run up so far and so fast. The coins haven't moved up as high commensurately in price, which means the premium is lower. And it's really low right now at 17%. And if this premium's a little high for you, you can buy the next two quality ratings lower, MS63 and MS64, which have about more than twice the known survivors of the 65 at 10 and 11% over their gold content today, which is tiny premium. So the vintage new US numismatic market right now is very low in premium. There's some really good buys to be had. We like them a lot in 65 condition. If you want to buy them a little bit more cheaply per coin, go for the 64s or the 63s, where your money goes a little bit farther. You have a little bit less leverage, but you have a very low premium today. So that's our update. Thank you so much for your time. Thank you to our loyal customers who've enabled us to be in business for the last 27 years. We're grateful to you every day, and we look forward to helping you in the future. Thanks again. It'll be really interesting to see how the silver market shakes out, but it looks to me like this breakout is the real deal. But let's get over $37 an ounce to confirm that. So thanks. Have a great week.